Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Cate Long on the line. She's a financial blogger and founder of the Puerto Rico Clearinghouse, a frequent guest on our show. Cate, how you doing today?
I'm great, Joel and Brianna. Thanks for having me.
All right, to get you started, did you hear the news that Ken Orr's stepping down?
Yes, so Kevin's work is done, and they pretty much wrapped up the whole Detroit bankruptcy and raised new money in the bond market to fund refinance the debt they have outstanding, so he can go back to Washington now.
So, Cate, you sent over this study from Harvard that I've been looking at, and I was really interested in. It was measuring the corruption in American states. So, tell us a little bit
hmm
about which states are the most corrupt.
Right. So Harvard took a little bit different twist on this, and they sort of gathered up the perceptions of journalists in states about how corrupt the legislative and executive and judicial systems were in each state. And essentially, because journalists are right on the ground, they're seeing this stuff. And it's a little more telling, I think, than actual indictments or convictions. But so the Harvard study came up with the most corrupt state in terms of legal corruption was Kentucky, the state of Kentucky, followed by Illinois, and then Nevada. And then states you might assume following Mississippi, New Jersey, Alabama, New Mexico, and New York was kind of the lead states in terms of legal corruption. And that's where, you think of things like pay to play, where companies contribute money to candidates' campaigns to get favorable outcomes. There's all kinds of stuff wrapped up in that, but it's kind of a sad picture about state governments.
Okay, moving on here, you sent us an interesting chart here, and that was the Treasury versus the Muni yield curves here. Now, we're getting kind of deep here on our show. We don't talk about the fundamental stuff, so you have to spoon feed us here. But the 10-year AAA Muni versus the Treasury ratio is now at 90%, 30-year at 101%, and the Muni versus the Corp is at 100%. What is the yield curve trying to tell us?
Basically, that municipal bonds are still expensive as you go out to about 12 years in maturity, 13 years, what we call the belly of the curve. And then once you get out longer in maturities, municipal bonds are pretty cheap and give investors a lot of potential yield that they wouldn't have for the same level of risk as the U.S. Treasury.
Okay, so what you're saying is maybe you want to be staying away from munis at this level, or they're still a good investment, but you need to keep an eye on them.
It's a split picture, Joel. You probably wouldn't want to. They're expensive in the shorter maturities, and then cheaper in the longer maturities. But with the interest rate picture being so murky, people hesitate to buy long bonds because if the Fed raises interest rates, those bonds typically drop in value. So what you have here, what you see in the yield curve is, just sort of a reflection of uncertainty about rates in the new year in 2015. I did want to mention Illinois because we've talked about Illinois in the past, and I'm talking about the state of Illinois bonds issued by the state general obligation bonds, and there's very high yields in those bonds now. I was looking at some of the numbers. The 10-year bond of Illinois general obligation bond that matures in 10 years is yielding about 3.4% now on a tax-exempt basis, which on an equivalent basis, if you're in the high-income brackets, is about a little under 6% yield. So there is a place that investors might take a look if they're Illinois residents or if they're willing to take a little more risk in the municipal space.
So, the other thing we wanted to ask you about, Cate, was it looks like the National Association of State Budget Officers has come out and said that U.S. states are cutting taxes by the most amount in 14 years as a result of the expanding economy. What are your thoughts on that?
So, basically, the states have kind of got their financial issues under control for the most part. We don't have, we still have some outliers like Illinois and New Jersey, Puerto Rico, some places that are still struggling. But for the most part, states have managed to get their costs under control and, get revenues stabilized. It certainly helps with the economy staying, growing on a reasonable pace. And you have a few states that are going out to cut taxes, which is kind of surprising, or fees. But, overall, we still have pressures for most states, particularly Medicaid expenses and pension expenses. But it's a better picture than it has been. It's basically in better shape than it has been since the recession for states.
You said they're cutting taxes and fees, and that's surprising?
Well, it's generally you don't find a lot of governments willing to cut taxes. So on that basis, that is kind of surprising, I think. Most politicians generally don't cut taxes. It's kind of a rare thing. I think last time we were on, we talked about Kansas cutting taxes, and it's been a very difficult, now Kansas is in a lot of trouble because they cut the income tax.
So when's the federal government going to cut taxes?
That's a great question, Joe.
Never.
I don't know. Maybe some of your listeners have some thoughts on that. I don't see them cutting taxes again in the near term. But
okay. Also,
they're talking about.
Yeah, talk. Yeah, I kind of said that tongue in cheek.
Yeah, well, they're going to do tax reform, but basically, it's unclear. There's going to be winners and losers, and basically they're going to need to collect as much taxes as they do now. So some people are going to pay more, and some may pay less. So.
Okay, let's. We got a few more minutes. We're on the line with Cate Long. She's a financial blogger and founder of the Puerto Rico Clearinghouse. Just got a few minutes left. Let's just talk interest rates. We got good discussion going on with Sheldon McIntyre, Hurt Capital, and he kind of thinks that, man, they're going to test the water sometime, maybe mid 2015, just to see how the market reacts to an interest rate hike. We have Ron and Sana and Peter Schiff coming on the show later in the month for them to give their take on it. Where do you stand on interest rate hike in 2015?
If there's any kind of hike from the Fed, I think it'll be very small. I think this oil price decline, shows that there's pretty substantial deflationary trends in the economy, because part of this is supply issue and part of it's demand issue. So I don't think the Fed will be rushing out. I think they've already started to modify their language. And, everyone was looking at June 2015 for them to hike rates, but I think, they're going to keep some wiggle room for themselves in terms of how they go. I think Christmas sales will be really important. So we'll see. I mean, we had good retail sales this morning, which was a positive. But
not enough.
I don't see them rushing out to raise rates.
And then I guess the other thing too, and I know this might be a little bit out of your wheelhouse or whatever, but one thing when I look at inflation, even though every Fed bank or national bank is trying to get inflation in the economy, I mean, with crude growing down like it is, I mean that's a component of inflation. I mean, really don't have to worry about it there. And then also just a quick comment on the crude market, and then also gold. Gold got a nice lift off its recent low at 1131, hit 1141 the other day, and then got the big rally. Do you have any comments either on the crude and or gold market?
Gold I don't follow at all, but crude is essential. I think of crude as the lifeblood of the economy, and when prices go down, it just shows. Overall, it's slowing, the velocity showing, and a lot of exploration will come off, a lot of production will come off, which is fine. But it's, I think we talked about this last time, it's a boom and bust typically, and the Saudis out front, keeping downward pressure on prices. It'll, in certain parts of the economy, they'll provide a small boost, but it's indicative, I think, of some slowing fundamentals in the economy.
Any thoughts on? Oh, I'm sorry, Cate. Any thoughts on Atlantic City?
No, go ahead.
Any thoughts on Atlantic City?
Atlantic City, poor thing. I mean, they should put it to Chapter 9 bankruptcy, like they did Detroit. Um, basically the gambling's gone away to the states, a lot of it around, and they've got this huge gambling infrastructure there, and city government set up to support it, but the main industry, gambling, is going away, and it's just hard to support a big infrastructure, public infrastructure, when your tax base is gone. So.
Okay, Cate Long, financial blogger and founder of the Puerto Rico Clearinghouse, joining us on Benzinga's pre-market prep, brought to you Markify. Cate, it's always great to hear your cheerful voice, and we hope you have you back on again soon.
Thanks so much. Happy holidays, guys.